This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hey guys, welcome to Breaking Banks Europe. My name is Matteo Rizzi. I'm the executive producer of the show. Today, we have a very classical format, news from the FinTech Front. And I have actually two very good friends with me today. One is a first-timer. The other one, she has been with us before. I don't think I will do much of the talking today because these guys sort of spread news for work. So they are much better positioned than myself to actually do this type of tasks. So, without further ado, let me give them a couple of minutes to introduce themselves. Starting with Anna Irrera. Welcome back to Breaking Banks Europe.
Thank you. Hi, Mateo. How are you? Yes, I'm the chief fintech correspondent for Reuters. I'm based in London. I was based in New York before, but before that, I was in London, and that's where we met ages ago. It seems like decades ago, but and I guess it's going to be a decade soon, maybe. And in my beat, I cover everything really fintech, from sort of what big banks are doing to what startups are doing to crypto to cards to whatever. It's a very big beat, and I have a global remit. So it's fun. It's been a busy year.
Yeah, I can imagine. You know, Anna, I always sort of praise Anna because I always said that she did the only meaningful fintech list ever, like back a decade ago. And I'm still talking about the fact that I was in that list. I'm super proud. And since then, everyone else has been copying Anna, afterwards, right? So I'll, if you don't mind, I will keep using this as a reference.
That's fine.
So, second guest, Ali Paterson. Welcome I know you're a fan, and thank you. If we might actually publish a picture of you. You have even a provoke T-shirt. Ali, welcome to the show.
Thank you very much for having me on. I snuck on to when Brett was doing it at Cybos 2019 for a wee bit, but I think that was very unofficial, and mostly me just winding him up about his take on global warming. But yeah, that was quite a while ago. But I'm Ali. I am probably, on a good day, about 5% of the journalist that Anna is. I keep being referred to as a journalist, and I'm not a journalist at all. But I run the FF News website, where we have an inbox that we blast out all sorts of news. And most recently, we got a wee bit of attention for. We did and it's kind of appropriate to today's show. We did a rap battle of all the neobanks in a bit of a comedic turn, which was unusual. But yeah, thanks very much for having me on.
So actually, it's funny because the format of this show today is that I pick a couple of news that sort of caught my attention. You guys can do this too, sort of even like unexpectedly. And the first topic I actually wanted to talk about is exactly concerning neobanks, right? Simply because we all heard like the Revolut, like a big bank, and the quotation of TransferWise. The number 26 wants like I don't know. I believe it's like a 10 billion. I mean, I kind of lose counts of how many dozens of billions these valuations are becoming, right? And yet, when you sort of scratch the web a little bit, you realize, for example, that out of the 234 digital challenger banks, only 13 are currently profitable. And most of them are actually in Asia. I think that the only one is Starling and Oak North in the UK, but everyone else is pretty much losing the money. So, what do you think? This is going right because and actually, sort of spicing this all up, there is this tweet from our friend Brad Limmer, from the Unconventional Ventures, and Brad says, imagine, just with the Revolut raise, how much good you can do in the world, right? Which is, it's a thought that has the merit to exist, but at the end of the day, you could say it about pretty much any fundraising of a startup that is losing money, right? So let's open up this and start telling me what you think. Anna, you want to start?
Yeah,
since you just read the brief 5 minutes ago, so I will give you the chance of going first.
Just improvising it. So I mean, as everyone, obviously, when I saw the valuation in the round, I was, it's eye-watering numbers and it's massive, and also the fact it was SoftBank, and so the fact that it tends to do giant rounds, they've not done so well. Some of them recently, if you think of WeWork, even Cabbage sold. And I mean, the situation there is different because, there was sort of the COVID crisis and small businesses weren't doing well. But, there are many things to think about. So obviously, you're thinking this startup is valued more than a giant UK bank. It has a lot less revenues, not even profit revenues than a big bank. And so you have to wonder, are investors valuing financial companies as tech companies when they should actually be valuing them as finance companies and financials? Like, what happens when they list? Can they keep their valuation, or will they be, assessed and priced by financials analysts who look at different numbers to see if it makes sense? So obviously it's something that you think in terms of is it worthy, not worthy from a sort of socially positive? I mean, first of all, who am I to say? I shouldn't even have thoughts like that, being a very unbiased journalist. But, the fact is they do have clients. People use them. The people that I know that use them love them. They did offer a service banks did not, for a variety of reasons. And so, there is a reason for them to exist. And there were big tech companies that didn't make money for a long time. So, there's that reason too. The fact is, I guess only time will tell if they can turn it around. And they keep saying they'll I think they say they'll be profitable next year. I don't remember now. I don't want to say something wrong, but it's not like it's never going to happen, or you can't see how they might be profitable. It's just a question of, when they list, will the valuation are they overpriced anyways compared to whatever they could be priced realistically? But,
do you believe, statistically speaking, that listing themselves is the only way out, or at this valuation you see anyone buying them?
I don't think they would be acquired at this valuation. I mean, unless maybe a giant tech firm, but it's so high that, although, to be fair, Nutmeg got acquired and it's a completely different scenario. They got acquired for a big chunk, and people, so you never know. But I guess, I don't know. I see them more as potentially listing than being acquired, but I don't know. I'm not a banker. I'm not an investment banker. So fortunately, I don't have to tell them what to do.
Ali, what do you think?
It's interesting, Anna, raising things there around the pricing, the IPO. I've been following Wise is listing on my the old free trade account, and it just listed at the price, shot up, and it's been nice and flat. Having said that, I haven't checked it today, but it's been nice and flat and seems to have been priced at a very accurate figure. which is about a third of that of Revolut's. I can't see a bank now turning around and trying to acquire Revolut. I 100% agree. The only way out, if it is to go public. I think that'll be probably Revolut's end goal. And I know Monzo was saying a similar thing today. They were flirting with doing an IPO. One thing I did thought was incredible. I got to take a moment to appreciate on Twitter Chad West. He comes up with some incredible one-liners, and he took it upon. He kind of made it his mission. There are a lot of tweets about the valuation of Revolut, and he was going around correcting people. And the one I wanted to highlight was someone was putting about Revolut's value at this is all in US dollars. Revolut's value 33 billion, customers 14.5. Corrected by Chad to 20 million, which is again a phenomenal amount.
He doesn't even work there anymore, right?
I know, so, he's still drinking the Kool-Aid. It's incredible. I love it.
Maybe he has shares. He's an early employee, I would imagine.
Revenue 360, and someone was comparing. I forget who it was comparing it to Nubank because that's quite a similar in terms of valuation. Valuation 30 billion, customers 40 million. So obviously, again, revenue just shy of $1 billion. So you can kind of see it. You can't compare apples and oranges, but that's probably the closest in terms of valuation. The other thing I thought was incredible as well is Nikolai's net worth on paper following this valuation is 6 times that of the total valuation of Starling Bank, which made me go, "Wow!" Like it's that's SoftBank money for you, though, isn't it?
Yeah, and by the way, talking about personal wealth created by Revolut, I'm pretty sure that you saw that tweet saying, Revolut actually might have created the first crowdfunding, millionaires, right? Because the valuation at which I believe they raised was that $2 million or something. At still a reasonably low valuation. Now, I always say that personally speaking, it's very hard to have a decent multiplier when you do crowdfunding. You have to be extremely lucky, but they might have created a good precedent, don't you think?
Yeah, I thought that was
step in there. Sorry, go ahead, Anna.
So yeah, maybe you'll contradict me, so make it more spicy. But I thought it was interesting because I always thought, equity crowdfunding. Can you actually ever become a millionaire with that? But if this happens, it'll depend on the class of shares they have, right? Because then what happens if they're actually getting an exit? Their shares might not be worth much, but I don't know.
I'm going to contradict you there. I mentioned them earlier, but free trade on Crowdcube, that was phenomenal. There were, I think, at least 4, or certainly 4 that came forward, people that made over £1 million sterling from free trade Series B, because all those that kind of got in on the first, I think they've done something crazy like 20 different rounds on Crowdcube, and some of the people that got into the first one actually kind of made $1 million off it. It was a 48 multiplier. I was very fortunate that I actually got in on that, but I wish I'd invested more than the 50 quid that I did. But yeah, so it does kind of. Hopefully, I think that has set a precedent that you can, depending again how it's structured, make some sizable returns on crowdfunding, even if it's kind of literally a small amount invested.
Yeah, I actually have a very nice anecdote on Revolut. Actually, 2 of them. Revolut one, Tribe. I believe it was back in 2015 or something, and. Actually, Nikolai came to the pitch coaching session before.
Singapore, right?
Yeah, it was Singapore. Yeah, so he came into the pitch coaching session, and his first presentation was literally bashing the banks and saying, you guys are useless, and you're sort of. I am paraphrasing, of course, but we're going to come and save the customers from unbelievable fees and so on, right? And I was with Leda, I still remember, and Leda and me said, dude, if you go like this, don't forget that your judges are going to be bankers. You better. Why don't you sort of change your tone a little bit? So we coached him, and he ended up winning. And I was actually, you remember still, Anna, with SBT Venture Capital back then, like my very first fund, and it was a Russian fund. So I kind of like gently nudged like the CIO of the bank. I closed them in a room with Nikolai and say, guys, you guys in Russian, sort shit out, and let's see if this. And we ended up missing the investment, and they was raising Series A. So that's that is a great, one of the greatest miss. Needless to say, I was beyond convinced that we should. I don't want to say how much they were raising in Series A, but it was they were raising between 3 and 5 for like between 20 and 30% of the company, something like that. I might be wrong, but I'm not far from these actual numbers. But that was the typical, too early for someone like the bank that I was, so that the fund belonged to be able to close the deal. And then, Revolut has always been somehow special, in the sense that it always seems to be more aggressive than others and get to higher valuation faster than others. When rationale, when you see and you compare them with the rest of the banks, are not that different. What do you think?
I think maybe they seem more aggressive for European standards, I guess, and more ambitious. Whereas if you place them in the US and standards there and valuations there, they're like, oh yeah, they're a tech firm. So maybe they just have lots of foreign investors who believe in them, and they have that mindset that's not. I guess they are European, but not necessarily, the more prudent, let's go slowly and raise and whereas here it's just let's grow fast, like a Silicon Valley tech company and get money from SoftBank and go crazy within the limits. Crazy, obviously not crazy, but like in terms of like let's be ambitious. I mean, speaking to them, they have plans to go to China. I mean, that's wildly ambitious, right? Going to China to service Chinese customers. So you have to give it to them, like they are as ambitious as you get. Even sometimes maybe you think, is that not very logical to do something like China? You need to be very courageous, but you're right. It does fit this kind of. It is different. There's a different vibe to them than the European fintech companies.
By the way, Ali, tell me. Yeah, sorry. Go ahead.
I was going to say China seems to be where like Google, Uber, and such is where tech firms it's the graveyard of tech firms. Is where it's the Afghanistan of the of the tech firm wise.
I after I read the news, I sent an email that, of course, Nikolai will never read, and maybe if someone can convey the message. I said, totally when you want to go to Africa, because if Africa is now, the neobanks are raising there, the regulators are they are willing to make the right efforts. And there is a huge sort of currency problem, or challenge, between one country and the other. And in some countries, like cheaper to import like a tea from China that's from the neighbor country, just because currency fees are exorbitant, and banks have the leadership and like a hard to beat sort of position, right? And multi-currency, I have seen some multi-currency wallet in starting off in emerging markets. What do you think? Is there a future for this? Because neobanks, like a new bank in Brazil, great, but I haven't seen any like a true multi-country neobank sort of hitting at emerging markets. Why do you think it's not the case just yet? Because the market they are hitting is already too big that they have other fishes to fry, or what?
I've been following very closely Kuda Bank in Africa, in Nigeria, because that's a huge market. Yeah. And to be very frank, I will put up I believe in them so much, I will put up my kidneys as collateral to invest in them at this stage, because that's going to be the new Bank of Nigeria. Their growth rate, their the need that's there and the untapped market is just huge. And I'm quite surprised that there's not a Kuda Bank's kind of the kind of top example, because I think they've, of all the banks in Africa, they've raised more than anyone else by quite a significant margin. I'm surprised we're not seeing more of that, especially after new bank success.
Go ahead, Anna. Sorry.
I think this just raises the question of how successful are neobanks when they expand completely to another market. So one thing is like from UK to Germany, and already in some cases that doesn't work well. But have there been any neobanks? I'm talking specifically neobanks, and so I'm not talking about Wise, where there's like the money transfer component that's different, that can go to another geography and like kill it. Because Revolut's, to their admission, they have not done as well as they hoped yet in the US. Monzo, we don't have much news. Number 26 either. I think Nubank's expanded in Mexico. I don't know if that might be doing well. I'm genuinely not sure. But I think like often neobanks, they fix a problem, that a series of issues that are very important in that market, be it like, and they're built to fit in within the perks of that financial system. So, it's like either lack of competition with big banks, too much competition, high fees, or their business model is built to thrive there, like in the US with interchange fees. And then maybe they're pushed to expand in a bigger market by investors, or because, obviously if you're UK and you have a US investor, the US market is massive, you want to go there, but then they just don't work culturally. So I'm wondering if, the neobank of Africa has to come from Africa, and maybe it's just Nigeria and the neighboring country, and not Nigeria and South Africa, or Nigeria and, Morocco. It has to be like, they have to know their markets and their national markets really well. And I guess Europe is a bit different because of the EU and it's slightly different. But, I'm waiting to see a big challenger bank that does really well in a big market that's not their own. Maybe there is one, and I just should know about it.
If you put both your kidneys as a collateral, maybe I should put like a 20K or something in Kuda, because or like a very small amount, because they're still like they're not a unicorn. I believe the last raise, Ali, help me, but was it like maybe 80 or 100 million or something? I mean, they're not a unicorn yet, right?
Not even that. It was their. I remember they did their. I think it was their Series A a few weeks ago.
I think they raised 10 million. Is that possible? I believe they do. They did, because the paradox is that in this case, it is even scarier, because they raise that much, but the number of clients they have, it's like I want to say neglectable. I follow, because I invested. The Africa is the only continent where I invest currently, and Kuda was already like, the valuation is crazy unless you believe they become a unicorn.
It was a 25 million. Earlier this year in their Series A. I don't know what the total valuation is, but I know that at the end of last year they raised 10. So far this year they've gone from 300,000 customers up to 1 million customers, which in 6 months, if they maintain that acceleration, the reason I'm very keen on them as a whole is that there's a market of 200 million people in Nigeria, which is being completely ignored by. There's no Albo in Nigeria. You can't get a Revolut account in Nigeria at the moment. They're kind of the top dog to tap into those 200 million people. And also I know we will come to this later on. The other thing that is quite interesting about them is their talent there in terms of how they're building their tech stack, because it's not just kind of cookie cutter. It used to be a thing 5 years ago. Everyone was, get the Wirecard license via GPS seemed to be the go-to. But they're kind of taking a much more, not just build it themselves, but build it to be able to understand it themselves, as opposed to getting cookie cutter off the shelf. So that's one of the reasons I'm very, very keen on those guys. But to come to Anna's point, I didn't even think of that. You hit the nail on the head. You want to understand your market. So the likelihood of, for example, Revolut going into Nigeria and competing with Kuda Bank and be successful. There hasn't been an example out there of own neobank outside of their home turf, absolutely winning it.
Indeed. And I'm curious about what is going to happen in Latin America, because, given the last raise of Nubank, I'm very surprised if they don't sort of open up, to go into at least in the other 2 or 3, like big markets in Latin America. I think that in the next 12 to 18 months, there will be a few more surprises. Okay, guys, Ali, you sort of spoiled our next topic, but in the meantime,
I teased it.
Exactly, and but in the meantime, we managed to go to the first half of the show just with a single topic, which is not unexpected, as there is a lot to talk about. So I propose that we wrap the first half of the show right now, and we kick it off after the break with the second topic. Hopefully, we'll get to the third as well. Thank you, and stay with us.
The FTS Fest is back. As 2021 develops, it will become more and more apparent how this year can truly mark the start of a second fintech revolution. Starting with a focus on sustainability, financial inclusion, and impact investing, topics that today must be considered transversely. We'll explore trends that are already shaking up the industry, such as embedded and decentralized finance spotting. Be part of the FinTech Revolution 2.0. Join ftsfest.com.
Hey guys, welcome back to Breaking Banks Europe. We are here with Anna and Ali. We had a blast sort of gossiping and discussing and sort of analyzing, at the same time, the whole neobanks sort of stories, to the light of the recent news. And Ali was talking about, the talent in his last commentary. And the talent is a topic super close to my heart, and I want you guys to comment a recent news about. It's a U.S. study. Like they took the first 10 largest U.S. banks, and they realized that the amount of salaries or compensation for the top executives sort of raised 10%. In total, and the reason for that raise is the fact that apparently that was the article was saying that they were trying to compete with the fintechs that, of course, are stealing resources, from the big banks because they're gearing up, to get maybe more regulated or to get more clients. I'm thinking about the other services, for example, what Starling is doing with Wealthfront in UK, then they need the sort of, a sales force, I guess, to start, going to the high network or at least to the mass affluence, and they can attract with the social, as many as they want. But at the end of the day, you need more like consultative selling. And in order to do this, you need people with the experience. Do you actually think that the banks are starting worrying when it comes to attract and retain and mostly retain? And if you were a good talent today, would you even be close to be willing to work for a bank? Ali,
I'm going to defer to Anna first. I want to.
You want to contradict me? So actually, they've been worried for a while, right? They're not stupid. They, especially tech talent, it's very hard to come by. Literally every industry in the world wants good coders and good engineers, and so. But
that's not the bank thing, right, Anna? That's a global thing. Everyone.
It is. But bank systems are, as you work for Swift. It's quite critical that they work well. And if my ASOS website goes down, I'll be a bit pissed off. But if my bank stops or my bank card stops working for 3 days, then the level of upset that I'll be and that a regulator will be is quite different. And that's sort of just on the keeping the bank going talent. And then you also need, imagine the cybersecurity, that's just a massive risk that's growing. Everyone has cybersecurity needs now, and you need really good people because you're only as good as the adversary is getting. And then on top of it, if you're actually and they do now genuinely think that they need to compete that they need to remain competitive because of the threat from fintech and tech firms to innovate, then you need really good people that can help you do that. So I think and based on conversations, they've been worried for a while. We've seen, some of the banks like Goldman, try to change a bit of, you could say that it's just the surface, but they've been doing things to make, work-life balance a bit better, or make engineers wear what they want, or just change things so it feels a bit better. I don't know, at the end of the day, I think a lot will depend on, especially now post-COVID, people have gotten used to working from home. They've had a lot more flexibility. Will they be able to maintain that flexibility? Do they want to maintain that flexibility? I think there might be a lot there to see, will people be okay to give up on some money, but they'd for working from home forever, or maybe they want to there's so much to balance that. But I don't know. I think sometimes if you are very good, it depends what your interests are, right? And what bank you're joining has everything, right? Some banks may be more attractive, and some projects you're working on at a bank might be more attractive. And in some cases, working for a big tech firm might be more attractive. Let's not forget that compared to a few years ago, where banks had come out from the financial crisis with a really bad reputation, now tech firms, some of them don't have a great reputation as well because of privacy. If you're maybe, more conscious about these things, can you say, oh, Facebook is a greater place to work at than, JP Morgan socially and world impact wise? You might, first of all, you might not care. But second, you might also think, I'd rather work for a bank. They make money, they deal with money. That's what they do, rather than working for a social network. And there's issues with how they're handling data and all the rest. So I think it's more nuanced than it was a few years ago, but it's definitely still a major issue, the competition for talent.
Ali, before you kick in, it is interesting what you're saying, Anna, because no later than today lunchtime, I'm in Milan, and I actually stepped into a guy that works today for a financial institution, and he was saying that he got proposed sort of a new team in the financial institution working in DeFi, which is interesting, right? So an Italian financial institution that is interested at, putting a team working on DeFi apps. That's amazing. But you know what? He also had a proposal from a big four, a big four consultant that was economically speaking way more interesting. At the same time, he says, well, maybe the job is not going to be as interesting, but, it's super flexible and money is twice or three times. So my impression, and Ali, sorry to sort of having this comment on top of what I was saying, but I want you to comment on both. I even wonder if actually banks have more than the fintechs as a competitor right now to retain talents. Ali.
Yeah, it's the study. I mean, I would love to see the absolute breakdown of it, because it is in very broad strokes. I think the biggest gains in terms of cost, in terms of expenses, was Goldman, but I have no idea on where that war for talent's going. Is that money being paid out to your top VCs within that arm of it? Or is it all going after just engineers and just coders? I have no idea, and that of course makes a big difference. It's also kind of interesting that the banks mentioned in the study are also all the ones that have been talking at every given opportunity about how important it is for everyone to come back into the office, compared to some of the other tech companies. So I don't know if that's a factor there. I mean, there's always going to be a war for talent. Whether this is something that's more of kind of it's more the cost of people moving around a bit whilst trying to find out. Actually, I want to be in a position where I can work from home because it's just giving me a much better work-life balance and more of a kind of quality of family time. I suspect, to what Mateo is saying, that it may be coming from outside of the traditional banking industry. I don't think it's banks cannibalizing each other's talent. I have no evidence for that other than anecdotally on Twitter. You have, for example, you have the likes of Nigel Walsh going to Google on the insurance side.
Or Sam Moll is another example. Or
Sam, and there's also I also think we're starting to see a lot more people having, again, anecdotally, I've got zero data to back it up. People who have been working at a bank for the last 10 years, they're then in lockdown, and that gives them a chance to pause and reflect on themselves, and they're starting something new. I will struggle to find the actual data, but there was a wee article basically saying that the amount of companies that have been incorporated since lockdown has been instigated is crazily large compared to what it was beforehand. So I wouldn't be surprised that there's a lot of talent that is now going, actually, I'm going to start my own thing. Oh, we'll pay you actually a bit extra, or something sort of similar to retain talent from going off and doing something different. So yeah, lot of options, but I think we got to break that. That data's got to be broken down because it's in very broad strokes.
It's interesting, Ali, because you gave me an idea, and it's for almost like another format of the show, because we gave two names, our friend Sam or Nigel, and then you have like accountant tendency. I'm thinking of Derek White. Derek came, from a bank, and then back to Google, huge position at Google. With Derek, I know that we all know that he hired like a few, like a very known faces, right? Like including Sam, that sort of are working in the same sphere. And now, he's back into a still very large, but maybe more agile system integrator. So I almost have how do you say it? Stalking people's move and extrapolating how the careers world is going would be interesting, because when you look at the big tech, they seems to attract names because the names are the one recognized by the clients. But the sort of names they attract, then I'm not sure they can keep them, because the culture, Google is not a startup anymore, and probably you have to be, it becomes almost more bureaucratic, as the bank they originally sort of escaped from 10 years ago, don't you think?
I concur in terms of the Google. Yeah, Google's no longer a startup. I have to admit,
startup mentality, of course, is not a startup. I was talking about the culture.
Off with Derek, I would put a ring a ding ding. I predict a thing. I wouldn't be surprised if Galileo is acquired by Google. I wouldn't be surprised in the slightest. But then, I've been wrong on that front many times before.
Anna, you have been right a few times when you're talking about acquisition. What do you think about this the tech giants trying to become smarter in the fintech space? Because that's actually a good sort of transition. I want to talk about the embedded finance, with you guys a little bit, and that's a nice transition.
Yeah, I think it's interesting because what they've been doing, everybody's been talking about, tech firms coming into finance, that's so scary. And they've all been doing it, but they've all been doing it in specific ways, in ways that perhaps people weren't predicting, and they still are all maintaining some sort of discipline around why they would do it, right? They're just trying to drive more people and keep more people on their platform, rather than doing it as a way to do finance, if that makes sense. Like, they don't want to be a bank to be a bank per se. They want to offer services to their customers. So whatever their main business is, or their platform is, they keep them there, right? But we have seen, I guess that's largely it. So I think acquisitions there would make sense, but I also see them just partnering more. Like, look at Apple with Goldman. They just announced they were doing buy now, pay later with them after the card. Google partnered with Wise on money transfers. Obviously there might be acquisitions, but I see them as being pretty conscious about the fact that they have antitrust regulators sort of breathing down their backs everywhere in the world, especially in Europe. And so they're very careful that they don't, and some of them are kind of already in everything. And so they're very careful that they don't probably step into finance too aggressively. I mean, look at what happened with Facebook and Libra, regardless of how that was handled, how ambitious the project was, there was just a massive worldwide agreed for, like, everyone was agreeing that was not going to happen, every regulator. So, there is very much, I think they understand that. I get the sense that they know that if they move into finance and banking, which is so regulated and so important, they have to tread carefully, and they have to do it in a way that's, also business-wise just makes sense for what they do. But again, obviously, they have the money to buy whatever they want. Even think of Amazon.
True. And actually is, talking about like a non-perceived financial services players getting into financial services. What I think is the sneakiest sort of thing that is happening is that the threat for the banks and also for some of the startups is not coming from the big names. And to me, the big example is like Booking.com. So our friends Dan Marovitz is good, because I realize with both of you, there are so many people we can talk about just about their moves and what they've been doing. It's so funny because we have the same references, so we will keep doing this. So Dan has just changed his status into the Chief FinTech Officer of Booking.com. And he has been developing this platform for the past couple of years. So Booking.com, what they did is they hired Dan, then hired, he was staffed by a couple of hundred people. Maybe he didn't hire that many, but whatever, the team is huge. And they basically, Booking has built a whole brand new credit and collection, platform that allows them to marginally increase the bottom line in terms of fees, simply fees for collecting their money. And I know for a fact that in more than one country, 9 out of 10 hotel rooms are on Booking.com, and Booking is a super cash-rich company. So, and these guys are actually self-serving, right? They are not pretending today to be the embedded finance sort of platform to start reselling financial services to third parties. So they started by serving themselves. But then all of a sudden, I can totally imagine the same platform start doing lending. Maybe, they have everything. They have all the data about their clients, meaning the hotel in this case. What stops them to start, using data to allow, to be like a loan or to let these guys or loan originator for their clients, So there is and they started in sort of a very soft, again, self-serving, unexpected way, but they might become significant threat to some of the other financial services players. Don't you think?
I think it depends on which financial service player you're talking about. Like if you're talking about a big bank, I'm not sure, but maybe some smaller specialist lenders, I guess they might be a threat to, or they might be a threat to some business line of some bank. Because if you think about it, Uber lends to its drivers, right? I'm pretty sure, right? So I don't think it's has it had? I'm actually not sure, but I don't think it's not taken down a bank yet. So I think it's more maybe the ones that are on the people are financial services business that are specialized in the areas that these guys want to target, then they'll see that drop, right? And also, I don't know, the question is always what percentage of total revenues will come from Dan's business lines compared to the total business lines of Booking, right? Is it that strategically important to them, or is it just a nice thing to have? Again, to make sure that they're keeping people on their platform, because they're doing it to keep, people with rooms to list there, or, rather than because they want to offer bank accounts and loans and compete on loans. So I think there's always that difference. I guess that you could say, if Booking starts and then an Airbnb does it and then another one starts, and overall like lending to travel might be affected, but I'm not sure if it would affect, because the reality is, these guys, they don't have deposits, right? So their cost of cash is much higher always, right? So at a point that does impact how much money you're making, right? If you have to go to someone else for the money, I mean, I guess they could lend the money that they're making elsewhere, but if you want to be a great lending business, you need to have your own certain money and you need to be able to lend at better rates, right? That's what makes you more competitive.
Yeah, actually, is Ali, before you jump in, I was actually I'm doing a couple of presentations on embedded finance, and they say that by 2030 the value of embedded finance transactions, combining payment, lending, and insurance, will be 3 times the value of today's top 30 financial institutions, right? But it is true that most of that value will be payments. Actually, almost half of it, and only like a third will be about lending, and then there's the insurance, which is of course catching up. Rapidly, because it is I don't want to say the easiest, but is like the less competitive and most immediate, like a product that you can cross-sell in many transactions, right? Be it, an instant insurance in the Uber space, or in buying goods, or whatever that is. So what you're saying is certainly more true for the lending space that for the payment space. Ali, what do you think?
I was saying, just going back to what Anna was saying about Dan, I would love, if there's a way to kind of get the transaction fees that are going through the MasterCard and Visa rails, etc. If he can lower that down, I think he'd be the golden boy at Booking.com. I wonder, I don't know whether you guys have ever heard this quote before, so apologies if this is new to you. But Bill Gates once said this. He said that we don't need Bunq anymore. Have you heard him say this? We don't need Bunq anymore. It's literally the most overused quote, but it's so true. We don't need we need banking, but we don't need banks anymore. It's so overused, but it's so true. I was always fascinated that in terms of the channels that financial services reach people, sort of turn of the century, you had AP Giannini, who I'm a massive fan of. He brought banking from a few centralized locations to the branch network in America. Completely changed the game. It brought it from tens of thousands of people to millions of people. And now the smartphone has brought finance to literally billions of people. And embedded finance has the ability to effectively have a bank embedded into every single app on there. Uber, Amazon are kind of the go-to ones. But even on simple things like Booking.com, the opportunity is, absolutely massive. We were looking at a company called Fly Now, Pay Later. Exactly what you expect. It is you pay for your flights and pay it off in installments. There's no kind of interest. It's like a buy now, pay later purely for flying, embedded into the flight searches itself, so you can literally click and see how much it's going to be for each one there. Phenomenal example. It's encouraging transactions, but also providing a lot of data on the individuals as well, which helps build up their own kind of credit rating and understanding of them. To the overall point, all for it. More embedded banking. Get some more of that about. Embed everything in banking.
Actually, it's funny because you were mentioning CUDA before, and I believe that emerging markets, specifically Africa, is a great example because the regulators are somehow not as strict, or they allow you to be a bit more creative. When you look at the number of super apps that are raising in Africa, that I can name you 5 different ride-hailing services that natively are built with the financial products on top. So what you were saying, Anna, like Uber is doing, is lending money for the drivers to actually buy, the car. Well, there are actually, this is the way they actually build the startups directly in emerging markets, and they add digital payments, insurance, microloans, of course, and also like saving products, like the Rosca model, where everyone puts a chip per month, and once per month, so one takes out amongst the drivers of the same app. These are just few of the examples.
Someone's been speaking to Miss Mahanti.
Yeah, well, yeah, this exactly. So, but the Rosca model has been existing for years, and this is how natively, they call themselves super apps, because they understood quite fast that if they start with a single service, they won't reach a critical mass. But all of a sudden, if they start as an embedded finance super app, as they call now themselves, they're going to reach a much more profitable market, because they are making more money in this case with the leasing of the vehicles than with the ride hailing itself. Okay, guys, I want to give you the opportunity to. These are the 2 or 3 sort of topics that I wanted to pick. Super fast, anything that struck you, because it's kind of your job as well to pick up cool news from the market. Like in a couple of sentences, anything that you want to share that sort of struck you and you want to sort of share with our audience. Anyone? Anna, this is really your daily stuff to find some gems. I don't want to spoil any of the next things you're going to write about, but just something that struck your attention.
I'm finding this is more one area, but I'm really finding interesting all the stuff around central bank digital currencies is what's going to happen there. I know it's going to take a long time, but I was interested in seeing and how that will impact sort of commercial banking, if there will be an actual big change there, or if commercial banks will manage in the years ahead to maintain their role now, so that they don't lose position in sort of the distribution of money. That's one thing.
That's good. I'm going to totally steal this topic for the next show. I might invite you to talk about it. Ali.
I've been following it online, and this is weirdly connected to FinTech. That there was a football match on a couple of weeks ago. I don't know if you saw it, Matteo. It was England against Italy.
I did. Yeah. I
saw it too.
I read today that English people are boycotting Italian restaurants. So now, on the top of losing, they will actually eat worse. That was
yes. But obviously, there was a lot of horrific things written on social media, but that brought to a lot of people's attention about how we want some of the things we're saying, we want everyone to be verified before being able to put some stuff on social media. And then equally, people were saying, well, hang on a second, if you do that, the knock-on effect is you're throwing the baby out with the bath water. So it has a major effect on the LG community. Same again with places like China with the Uyghurs. There's a lot of elements that you can't actually police. So off the back of that, I've been looking into various ways that identity verification can be done. And I know our friends at Trulio have done a lot of stuff recently in terms of they've got a bit of a mission to try and create a digital identity for everyone in the world. I think that's something over the coming weeks and months is going to become much more of a hot topic, because it bleeds out of FinTech into kind of every day into the general zeitgeist. So I'm expecting to see a lot more news and a lot more focus on digital identity around making sure that everyone has the ability to get a digital identity, and then looking at whether or not everyone should. So it's certainly an interesting flashpoint.
Absolutely. Well, I hope you guys appreciate the fact that, with 2 Italians and 1 English, I did not expect to be the English one to brought the food much.
Hamia Alba. I haven't got the accent, but I consider myself, Western Isles, Scottish.
Okay, let's talk about passports. Okay, so, but thank you for giving us the opportunity to talk about the football match. Anna and I certainly didn't want to put it in a ratio, but we were happy you did. Guys, thank you so much. Our time is over. Thank you for being with us. Super short, Ali, Anna, where people can find you, like maybe Twitter. Anna, you have a newsletter. That's your 2 seconds where you can find the moment. Ali?
If you look up my name, I'm relatively easy to find. I'm all over Twitter. I'm not on TikTok, but I am on Twitter, LinkedIn, Ali Paterson, 1T. Again, Scottish, not the English spelling.
Great. Anna?
Yes, it's the same. You can Google me, and I'm relatively easy to find on Twitter.
Yeah.
And then my stories are on Reuters.com.
Yeah, but guys, that these I'm not following a lot of newsletters, but these 2 guys together are amongst the few that I'm following, so it's really worth. So go and pick them up on social media is worth it. Anna, Ali, thank you so much for being with us today, and it is an epic wrap. Thank you.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.